Hello, future chartered accountants. I hope you are doing well. Yesterday, we covered this question number 2, but I think the balance sheet is pending. So, yesterday we solved question number 2. We have passed journal entries, all the journal entries. Now, we have to prepare balance sheet. So, which is pending. So, today is day 3. Today is day 3. So, today is day 3 and here we will prepare now balance sheet. So I'm writing this for my reference, okay? So day 1, day 2, day 3, okay? So today is day 3. Now we will prepare balance sheet. Now we will prepare balance sheet of this X Limited. So we have already passed journal entry in previous session. Now we will prepare balance sheet. So write down there balance sheet of X Limited, which is after buyback and issue of bonus shares. Okay. So draw this. It may take around 1 page. Okay, so first draw this. First, equity and liability. Equity and liabilities. Equity and liabilities. Note amount. So here, point number 1, shareholders funds. So here all these are the case of companies, okay? So we have to prepare balance sheet as per schedule 3 only. But the detailed discussion of what is this, the basic format of balance sheet, about this schedule 3. But detailed discussion about the profit and loss account and all the items of schedule 3, that is the part of next chapter, that is financial statement of company. So first, shareholders fund. Here you will write first share capital. Point number B, reserve and surplus. Then point number 2, non-current liabilities. Here long-term borrowing will come. Then point number 3, current liability. Okay. Now here total. Then asset side. Second, asset side. So here in asset, first non-current asset. In non-current asset, property, plant and equipment first. Property, plant and equipment. Then intangible, and then non-current investment. Okay, non-current investment. Okay. Now after this, write down current asset. Write down continuation. Okay, I'm writing in next page. Current asset. Current asset. Okay, then keep the space for 4-5 lines in current asset, because here in current asset you can see the 3 items are given there: investment, inventory and cash and bank balance. So give the space for Keep this space for 3-4 lines in current asset and then write down total there. Okay. Now working note, notes to account. Notes to account, always we have to prepare notes to account on share capital, then reserve and surplus and long-term borrowing. There is no need to prepare. Generally, we prepare notes to account on property, plant and equipment, but here there is no need to prepare notes to account on property, plant and equipment. The reason is that they have not given individually PP. PP is fixed asset. They have not given here individually property, plant and equipment. For example, plant and machinery, land and building, furniture. They have just given one single figure for property, plant and equipment. Okay, so there is no need to prepare notes to account for property, plant and equipment. So first we will draw here. Notes to account number 1, that is share capital. Notes to accounts number 1. Notes to accounts number 1, that is share capital. Notes to account number 1, that is share capital. Okay, so one by one now. You know that we have already discussed about it. When you prepare balance sheet, remember that the liability side has credit balances. So in journal entry that we have passed, if you have credited to that item, we will add it, and if you have debited to that item, we will less it. Whatever amount comes, we will write it down in new balance sheet. That is adjusted figure, we will write it down new balance sheet, which is after buyback of shares. Then what about the asset? Assets has debit balance. Asset has debit balances. So here in journal entry, if you have debited to that item, so we will add it, debit, add, and if you have credited to that item, we will less it. Whatever amount comes, that we will write it down in new balance sheet. That is adjusted figure. That is amount that we have come after the adjustment of the add or less, that we, because of this journal entry. So we have passed journal entry for adjustment. So if the figure which is given in balance sheet on asset side, asset has debit balance. If you debited in journal entry, add it. If you have credited, deduct it. Whatever amount comes, write it down in new balance sheet. Okay. So one by one, we will take figure one by one here. From here, liability side we will start. So you can see here, the first figure is share capital. Share capital of rupees 20 each fully paid up. Share capital of rupees 20 each fully paid up. How much is the share capital? 50 lakhs. So type in your calculator 50 lakhs. Type 50 lakhs. Okay. So in journal entry, we can see here that we are talking about equity share capital. Okay. Then after that we will talk about preference share capital. So here equity share capital 50 lakh which is given in balance sheet. 50 lakhs which is given in balance sheet. So 50 lakhs. Here we have debited equity share capital account by rupees 12 lakh 50,000. So less 12 lakh 50,000. Okay, capital as credit balance. We have debited it at the time of buyback. So less 12 lakh 50,000. That comes 37 lakh 50,000. Now 6th entry, 7th, 8th. You can see in the last entry. This one is 9th entry. Okay, in 9th entry, you can see we have credited equity share capital account by rupees 7,50,000. If you have credited, we have to add it. So plus 7,50,000, that's come 45 lakh. So how much is share capital after buyback? Equity share capital I'm talking about. We'll do the adjustment of preference share capital after this. But how much equity share capital we have? We have equity share capital of rupees 45 lakh. So write down here in notes to account number 1. In notes to account number, we can calculate number of share also. How much is the amount of equity share capital? That 50 lakhs minus 12 lakh 50,000 plus 7 lakh 50,000, that's come 45 lakh. And one share is of rupees 20 each. So divided by 20, that's come 2 lakh 25,000. Divided by 20, that's come 2 lakh 25,000. So how many shares? Because one share is of rupees 20. How much is the face value of share? 20. So one share is of rupees 20 here. So write down here 2 lakh 25,000 equity shares. 2 lakh 25,000 equity shares of rupees 20 each. 2 lakh 25,000 equity share of rupees 20 each. So how we have calculated? Total amount of share capital after buyback is 45 lakhs divided by one share is of rupees 20. So how many number of shares? 2,25,000. So here write down 45 lakhs in outer column. 45 lakhs in outer column, write down this 45 lakhs. Okay. How we have calculated this 45 lakh rupees? In balance sheet, 50 lakhs share capital is given. We have done buyback of 12 lakh 50,000 and then we have issued bonus shares 7 lakh 50,000. So how much is the amount? 45 lakhs. So remember one thing, whenever we issue any share other than cash consideration, what does it mean other than cash consideration? Means we have issued the share but we have not received the amount for it. For example, bonus shares. We have issued the shares but we have not received the amount for this issue of share because it is bonus share. We issue at free of cost. Obviously, we have adjusted that capital in reserve and surplus. But any shares which we issue for other than cash consideration, it has to be mentioned in balance sheet. So obviously, bonus share is part of this 45 lakh, that is 7 lakh 50,000 is bonus share, which is a part of this 45 lakh share capital. But we have to mention it that out of this 2,25,000 shares, out of the above 37,500 shares, 37,500 shares issued as bonus shares, okay, issued as bonus shares. Okay, now after this, because we have issued 37,500 shares as bonus shares, you can see here we have the calculation 37,500 bonus shares, this is issue other than cash consideration. That has to be mentioned like this here, that we have issued 37,500 bonus shares. Okay. Now next, which is given in balance sheet, that is preference share capital. How much is preference share capital? Preference share capital is 10 lakh. How much is preference share capital? 10 lakh is preference share capital. Okay. Now type 10 lakh in your calci, 10 lakh preference share capital, and here we have in first entry no preference share capital, second yes. We have credited here 2,50,000. So plus 2,50,000. How much is 12,50,000? So how many total number of preference share capital? 12 total number. Total amount of preference share capital is 12,50,000, and one share is of rupees 100. So if amount of capital is 12,50,000 and one share is of rupees 100, so how many number of shares? 12,50,000 divided by 100, that's come 12,500. So write down here 12,500, 10% preference shares, 10% preference shares of rupees 100 each, How much it is? 12,50,000. How much it is? 12,50,000. Okay. How we have calculated this 12,50,000? 10 lakh which is given in balance sheet, and we have issued 2,50,000 share, that we can see in journal entry. Okay, for issue of preference share, total is 12,50,000. How we have calculated this 12,500 shares? Total amount of capital is 12,50,000 and one share is of rupees 100. One share is of rupees 100. Okay, the total number of shares 12,500. Now you can do the total of this share capital and write it down in balance sheet. That is 45 lakhs plus 12,50,000. That's come 57 lakh. That's come 57,50,000. How much it is? 57,50,000. Okay, how much it is? 57,50,000. Total amount of share capital. Okay, write it down in balance sheet. 57 lakh. 57,50,000. Okay, 57 lakh. 57,50,000. Okay. Now we'll take figure of reserve and surplus one by one. First, you have capital reserve, which is given. How much is given? 1 lakh. But when you see journal entry, we have not done any adjustment in capital reserve account. The figure will be as it is, that is 10 lakh rupees. So Give the heading for notes to account number 2, notes to account number 2, that is reserve and surplus. So notes to account number 2, reserve and surplus, reserve and surplus. Write down there first capital reserve in outer column, that is how much? 1 lakh rupees. So write down here 1 lakh rupees. Write down here 1 lakh rupees. Okay. Now after this, securities premium account which is given 12 lakh. So write it down. We'll do the adjustment because we have utilized securities premium account somewhere. You can see here in general entry, in first entry, we have credited securities premium account by rupees 60,000. By rupees 60,000 we have credited, and here we have also utilized securities premium to write off premium on buyback, that is 10 lakh rupees. So write it down there. In detail. First, securities premium account, write down securities premium account, securities premium. How much it is? It is 12. How many in balance sheet it is given 12 lakhs. And we have credited it to securities premium account when we have issued debenture at premium. Remember, premium amount when we issue, it comes only in securities premium account. So how much we have credited when we issue debenture at premium, that is 60,000. You can see journal entry number 1. So add premium on issue of debentures. So how much? That is 60,000. 60,000 less we have utilized it. Whenever we debit it to reserve and surplus, we have to deduct it because reserve and surplus and liabilities and capital, all these have credit balance. So whenever we do credit, add it. If we have debited, deduct it. So here less that we have utilized to write off premium on redemption. Okay, write it down, premium on buyback. Adjustment for premium on buyback. How much it is? 10 lakhs. So in outer column, 12 lakh plus 60,000 minus 10 lakh, that's come 2 lakh 60,000. So write down securities premium in outer column 2 lakh 60,000. 2 lakh 60,000. Okay. Now after securities premium, next item is revenue reserve. How much we have in revenue reserve given in balance sheet? 5 lakh. But if you see here in journal entry, we have utilized revenue reserve by rupees 3 lakh. So we have debited it. So reserve has credit balance. If we have debited it, it means we will deduct 3 lakhs. How much will be balance? 2 lakh. And it is mentioned in question that we have to maintain a balance of rupees 2 lakh in revenue reserve. So write down here revenue reserve. Okay. Next is revenue reserve. The revenue reserve total amount is 5 lakh less transferred to, we have utilized this revenue reserve for CRR, transferred to capital redemption reserve account. How much it is? 50,000. Not 50, sorry, 3 lakhs. 3 lakhs. So how much balance we have in revenue reserve? That is 2 lakhs rupees. How much balance we have? That is 2 lakhs rupees. Okay. Now, after revenue reserve, we have profit and loss account. So first write down profit and loss account in inner column, profit and loss account. We have balance of rupees 20 lakhs rupees. We have balance of rupees 20 lakhs rupees in profit and loss account. Here 20 lakhs rupees in profit and loss account. Now what happened in first entry? No. Second, you can no P&L. Third, yes, you can see here in third entry that we have credited profit and loss account by 20,000. That is profit on sale of investment, 50,000. Okay, credited, it means we'll add it, and here you can see we have utilized 7 lakh rupees to transfer to CRR account. Okay, so the utilize means we have debited here, so we'll deduct this 7 lakh rupees. So write down here in profit and loss account, add profit on sale of investment, profit on sale of investment, which is 50,000 rupees, less transferred to capital redemption reserve account, transferred to capital redemption reserve account. How much it is? 7 lakhs, not 2 lakhs, 7 lakhs. We have utilized for CRR, 7 lakhs. So in outer column it will come 20 lakhs plus 50,000 minus 7 lakhs. Let's come 13 lakh 50,000. How much it is? 13 lakh 50,000. How much it is? 13 lakh 50,000. Okay, all of you understand this? 13 lakh 50,000. Okay. Now after this, dividend equalization fund. How much balance we have in dividend equalization? 5 lakh 50,000. So we have not done any adjustment when we have passed journal entry for it. So write down as it is dividend equalization fund. Dividend equalization fund is for the purpose of dividend. So dividend equalization fund. How much is? 5 lakh 50,000. One more item will come. Now you can write it down below this. I'm writing in next page. That is capital redemption reserve will come, because here you can see it is capital redemption reserve is not given in balance sheet. But when we have passed journal entries, you can see we have created a CRR account by rupees 10 lakh. You can see here 10 lakh rupees, and we have utilized from these 10 lakh 7 lakh 50,000 at the time of issue of bonus share. So how much balance we have in when we have created CRR? 10 lakh rupees, but out of 10 lakh rupees we have utilized 7 lakh 50,000 for at the time of issue of bonus share. So how much balance we have after the utilization of the CRR account at the time of bonus issue? The balance we have is 2 lakh 50,000. So write down here. Below this dividend equalization fund, last one is here. Capital redemption reserve. How much it is? It is 10 lakh rupees. Write down in inner column, less utilized for bonus issue. That is 7 lakh 50,000. 7 lakh 50,000. How much balance we have now in our write down in outer column? We have 2 lakh 50,000. Now do the total of reserve and surplus. So here it is 1 lakh plus 2 lakh 60,000 plus 2 lakh, then 13 lakh 50,000, 13 lakh 50,000, 5 lakh 50,000. Okay, and here 2 lakh 50,000. So total is, just 1 minute, 1 lakh plus 2 lakh 60 plus 2 lakhs plus 13 lakh 50, 5 lakh 50 and 2 lakh 50. Total is 27 lakh 10,000. So write down this 27 lakh 10,000 in balance sheet. Okay, total amount of reserve and surplus is 27 lakh 10,000. So write down here in balance sheet 27 lakh 10,000. 27 lakh 10,000. Okay, 27 lakh 10,000. That is reserve and surplus. The next item is long-term borrowing. So what is long-term borrowing? In to debenture any under non-current liability, there are different headings. One of them is long-term borrowing. So we'll discuss about what are the different headings in financial statement chapter. But what is this long-term borrowing? Any borrowing which is repayable after 1 year, that is long-term borrowing. So generally debentures are for the long term only. That's why we call 12% debenture is long-term borrowing. Okay, what do you mean by this? And very important point here now. What do you mean by this 12%? It means that the company is liable to pay 12% interest on these debentures. Okay, they are liable to pay 12%. That's why they call it 12% debenture. The very interesting case here, we have here 12% debenture is of rupees how much? 12 lakh 50,000. How much is debenture? Debenture is of rupees 12 lakh 50,000. But when you see here, when we have issued the debenture, this is a main difference here. But when we have issued the debenture, here you can observe that we have issued debenture of 14%. So both are debenture, no doubt about it, both are debenture. But one debenture is 12% debenture and another one is 14% debenture. So there is a difference here. What's the difference here? When we will prepare this notes to account number 3, that is long-term borrowing, under long-term borrowing, we will write it down these debenture separately. 12% debenture which is given in balance sheet and the 14% debenture which we have issued. Why? Because both are debenture, no doubt about it, but both are different. In one debenture, we are liable to pay interest at the rate of 14%, and in one debenture, we are liable to pay interest at the rate of how much? 14%. 14%. So write it down here. This is of rupees 3 lakh. So we are writing this debenture here. So go to notes to account. Go to notes to account number 3. Prepare notes to account number 3. Write down there long-term borrowings. Long-term borrowings, long-term borrowing. Write down there one by one. First, 12% debentures, which is of rupees 12 lakh 50,000, which is given in balance sheet. Then the debenture which we have issued, that is 14% debentures, which is of rupees 3 lakhs, which is of rupees 3 lakhs. So 12 lakh 50,000 plus 3 lakh. Let's come. That's come 15 lakh 50,000. That's come 15 lakh 50,000 total. So write down in balance sheet 15 lakh 50,000. Okay, 15 lakh 50,000. Write down in balance sheet. Just 1 minute. Write down in balance sheet. Where is balance sheet? Yes, 15 lakh 50,000. 15 lakh 50,000. Okay. Now one by one here. Next item is now this current liability and provision. So there is no change in current liability and provision because we have not done any adjustment to this figure. So write it down as it is, current liability and provision. How much is 5 lakh 50,000? 5 lakh 50,000. Okay. Now asset side, we can see a property, plant and equipment which is 1 crore 75,000. There is no change in value of property, plant and equipment. So write down here 1 crore 75,000. 1 crore 75,000. There is no intangible asset like goodwill, patent, no intangible asset. And the investment which is given in question, which is of rupees 3 lakh, but this is not a non-current investment. Non-current investment means any investment which is for long term, and any investment which is for short term, we call it current investment. So it is covered by accounting standard 13, that is accounting for investment, which says, we will discuss there also, but here you have to know what do you mean by current investment, long term investment. So current investment means any investment which intended to be sold within 12 months from the date of its acquisition, we call it current investment. So here they have given this current investment, so don't write this amount here in non-current investment. It will come under current investment, current asset only. So go to current asset, write down first amount here, investment. Write down here investment. Now how much amount is given in balance sheet? In balance sheet, they have given us how much amount they have given in balance sheet. In balance sheet, they have given us how much? 3 lakh rupees. So in balance sheet, they have given us how much? 3 lakh rupees. But when we pass general entry, here you can see in third entry, we have credited investment account by rupees 1 lakh. So type 3 lakh in Calc. It is asset, asset as debit balance, and we have credited here investment account by rupees 1 lakh. So if first of all, it is asset, asset as debit balance, and if we debit it, then we have to add it. If we are crediting it, we have to deduct it. So you can see here we have credited investment account, then we have to deduct it. So 3 lakh minus 1 lakh. How much it is? It's come 2 lakh. So write down here in balance sheet. Write down here in balance sheet. Investment 2 lakh rupees. Investment. How much it is? 2 lakh rupees. Okay. Now after this investment, next item is inventory. There is no change in value of inventory. So write down as it is inventories, that is stock. Okay, inventories. How much it is? You can give number to this also, A, B, C. Okay, it is same as it is, which is 2 lakh. No change in value of inventories. The third is cash and bank balance. Okay, so write down here cash and bank balance. How much given in balance sheet? In balance sheet, they have given 15,75,000. I'm writing here just for your reference here. What does it mean for your reference? Whenever I change the color other than blue color, whenever I use, that is for your reference. You don't have to write it down in examination. Whenever I use any color other than blue color, which is for reference only. Okay. So how much it is given in balance sheet, cash and bank balance is 15,75,000. When you see here in journal entry, when you see in journal entry, first entry we have debited by rupees 3,60,000. So debited, the bank balance is asset. It is asset. We have debited. We have to add it. So we will add 3,60,000. We will add 3,60,000. There are so many items here for bank. Just 1 minute, one by one. Just give me 1 minute. So we will add 3,60,000. Then we have issue preference shares. So 2,50,000. We will add 2,50,000. Okay. Then sale of investment 1,50,000. First do this. So here 12,75,000 which is given in balance sheet, 3,60,000 that we have received on issue of debenture, and 2,50,000 that we have received on issue of preference share. On sale of investment we have received 1,50,000. How much it is? 1,50,000. And after this, here we have also did the payment at the time of buyback. You can see here in entry number 4, we have credited by rupees 22,50,000. So we have paid it. So minus 22,50,000. Now tell me amount. 15,75,000 plus 3,60,000 plus 2,50,000 plus 1,50,000 minus 22,50,000. It's come 85,000. It's come 85,000. So write down here in 85,000. 85. Write down 85. Now do the total of balance sheet. Okay, do the total of balance sheet. 57,50,000 plus 27,10,000 plus 15,50,000, 5,50,000. So that's come. How much is 1 crore? 1 crore 5,60,000. 1 crore 5,60,000. Now asset side 1 crore 75,000 plus 2 lakhs plus 2 lakhs plus 85,000. That's come 1 crore 5,60,000. 60,000. Done. 1 crore 5,60,000. Okay. Now if you see here in all of you have written this 1 crore 5,60,000. Now if you see here just 1 minute. If you see here where it is in journal entries, you can see that we have taken all the items. Take. Okay, here you can see yes. Here you can see yes. You can see no, sir, this is pending. But you have debited here this 22,50,000 and then you have credited here. You say this 10 lakh is also unticked. You have debited here 10 lakh, then you have credited this 10 lakh. Then here done. Here you have credited 7,50,000, then you have debited 7,50,000. So this is done. We have done with question number, which is question number 2. Okay, so now come to question number 3. So do you remember when we started this chapter? So I have discussed just 1 minute. I told you that we will discuss about these 3 tests. That is resource test. We know that when we do buyback, it should be authorized by article of association. There should be special resolution. Those shares should be fully paid. There are some conditions. So there are 3 tests. These tests should be fulfilled. So here in question number 3, I think these 3 tests will come. So I will teach you now how we are going to do the calculation of these 3 tests. Okay. So come here, question number 3. We will discuss here those 3 tests. So come to question number 3. Okay. Write down here question number 3. Write down here very interesting question number 3, and page number is 9. Question number 3 and page number is 9. Okay, so question number 3 and page number is 9. Okay, I hope you have solved the practice question. So daily when I gave homework, you have to do homework at home, the solution which is already provided to you. Okay, so you have to do homework. 3 things is very important. First, watch daily 1 class, 1 lecture. The lecture is in 2 part. I mean day wise. I am saying day 1, day 2, day 3. If you are watching suppose day 3 today, so watch both part 1 and part 2. Be consistent. Second, do the homework properly. Whenever I give homework, In mostly all of the day I will give you homework. Do the homework regularly and appear after the completion of chapter, appear for the test. It is very important. Okay. Now come here at question number 3. So following is the balance sheet of Competent Limited as at 31st March 2021. This question is of ICA study material. Okay. Equity and liabilities, shareholders fund, share capital, note 1, 12,50,000. Reserve and surplus, note 2, 18,75,000. Non-current liabilities, long-term borrowing, note 3, 28,75,000. Current liability, other current liabilities, you have 16,50,000. Total of liability side, 76,50,000. Now asset side, non-current asset, property, plant and equipment, note 4, 46,50,000. Current asset, other current asset, 30 lakhs, totally 76,50,000. The notes to account, first, share capital, authorized, issued and subscribed capital, equity shares, fully paid up shares of rupees 10 each, totals 12,50,000. Reserve and surplus, securities premium 2,50,000, profit and loss account 1,25,000, revenue reserve 15 lakh, total is 18,75,000. Then long-term borrowing, 14% debenture, that is 18,75,000, and we have taken as unsecured loan of rupees 10 lakh, that's come 28, total is 28,75,000. Property, plant and equipment, land and building 19,30,000, plant and machinery 18 lakhs, furniture and fitting 9,20,000, total is 46,50,000. Now the company wants to buy back 25,000 equity shares of rupees 10 each. So here the number of shares is given that they want to do buyback of 25,000 equity shares of rupees 10 each. So they want to do buyback of how many shares? 25,000 equity shares of rupees 10 each. On 1st of April 2021 at rupees 20 per share. Okay, they want to do the buyback at rupees 20. Now if you see here in balance sheet, for share capital, it is notes to account number 1. How much is the face value of share? The face value of share is rupees 10. And they want to do buyback at rupees 20. What does it mean? If the share is of rupees 10, the face value of share is of rupees 10, and they want to do buyback at rupees 20, what does it mean? That they're paying premium on buyback. The premium on buyback will be rupees 10 because they're doing the buyback at rupees 20 and face value of here share is rupees 10. It means they're paying extra amount over the face value, that is rupees 10. So we call it premium on buyback. Now after this here, okay, they want to do buyback at rupees 20 per share. So buyback of share is duly authorized by its article. Okay, necessary resolution, they have to pass a special resolution. It should be authorized by article. It is mentioned that it is authorized by article. They have passed the resolution, has been passed by the company towards this. Now the payment for buyback of shares will be made by the company out of sufficient bank balance available as part of current asset. Now understand this point. What happened here? Here they are not issuing any shares. They are not issuing any shares here. It is mentioned in question that they have sufficient bank balance and they will utilize for the purpose of this buyback. If they are not issuing any share, whether it is mentioned in question that they are issuing any shares in the market for the purpose of buyback, the answer is no. It is not mentioned. It means that they are doing buyback out of profit. So whatever the face value of buyback of share, that should be transferred to CRR account. That much amount should be transferred to CRR account because here they are doing buyback out of profit. Now interesting point will come here. Now comment with your calculation. Now this is the main point. Comment with your calculation. What do you mean by comment with your calculation? Whether the buyback of shares by company is within the provision of the Companies Act 2013. If yes, pass necessary journal entries towards buyback of shares and prepare balance sheet after buyback of shares. So here we have to pass what? Journal entries, and we have to prepare what? Balance sheet. So we will pass journal entries, we will prepare balance sheet. That is not tricky. But what is important here? We have to comment with your calculation that the buyback we are doing, we want to do buyback of 25,000 shares. We want to do buyback of 25,000 shares. Now they're asking us to do the calculation whether this buyback is within the provision of Companies Act. What does it mean whether this buyback is within the provision of Companies Act? There are some calculation that we have to do, and we have to do the calculation whether this buyback is within the provision of company. There are 3 tests that we have to do, I will explain you one by one. So here in this question, we cannot just start passing the journal entries that we are doing buyback. Or entries are so simple here. Entries are so simple here. There is no issue of shares and all that. Very simple entries. Balance sheet will be simple. But what is important here to do the calculation? So there are three tests that we'll discuss here. Comment with your calculation means we have to do these three tests. First is the resource test, second is share outstanding test, and third is debt equity ratio test. And these three tests are important. We have to do calculation of these three tests, and we have, because it is mentioned in question that it is authorized by article, if special resolution has been passed and all that. But now we have to do the calculation of these three tests, and I will explain you one by one. Why we have to do the calculation? Because it is mentioned in question. Comment with your calculation means we have to do those three tests. What are those three tests? We will discuss it now one by one. Okay, we'll discuss it one by one. So before we pass journal entry, before we prepare balance sheet, first we have to do what? Those three tests. Write down now determination of buyback of maximum number of shares as per Companies Act 2013. So determination of buyback of maximum number of shares as per Companies Act 2013. So they want to do buyback of how many shares? 25,000 shares. They want to do buyback of 25,000 shares. But there are some conditions. So as per those conditions, we have to calculate the maximum number of shares that can they do buyback. So write down first test is resource test. So here we are calculating how much here we are calculating maximum number of shares that can be buyback as per Companies Act 2013. Okay, but how much they want to do? They want to do 25,000, but we have to first calculate here, because it is mentioned here. Comment with your calculation the maximum number. Comment your calculation whether the buyback of share is within the provision. It means first we have to calculate how many number of share maximum they can do buyback as per Companies Act 2013. Okay, and then we will see whether this 25,000 is within that limit. So first test is resource test. First test is resource test. Okay, so write down here. First test is resource test. Okay, first write down. I will explain you. Write down there maximum permitted limit. Maximum permitted limit 25% of paid up capital. 25% of paid up capital plus free reserve. So what is this resource test? This says that the maximum permitted limit as per the Companies Act, that is 25% of paid up capital plus free reserve. So how much is the paid up capital they have? They have capital of rupees. How much paid up capital is of rupees? 12,50,000. So write down there paid up capital. Write down there paid up capital. Paid up capital. How much paid up capital they have? 12,50,000. How much paid up capital they have? 12,50,000 plus free reserve. Remember one thing. Whenever I say free reserve here in this chapter, that is of a buyback of share. So as per the Companies Act, free reserve also includes here securities premium account. So do you remember that here in this chapter, whenever I say free reserve, which is including what? Securities premium account. Remember that. Okay. So whenever we say free reserve, which is including what? Securities premium account. Okay, free reserve and security. So whenever we use the word, so that is including securities premium account. Okay, so here write down here, add free reserve, add free reserve. So for buyback of shares, free reserve including what? Securities premium. Remember one thing, whenever I say free reserve, which is including securities premium. So here, how many free reserve they have? So if you see in question, so free reserve one by one, that is note number 2. The first is securities premium, that is 2,50,000. So write down here 2,50,000 securities premium, 2,50,000. Then profit and loss 1,25,000. Profit and loss account, which is 1,25,000. And then revenue reserve they have 15 lakhs. So revenue reserve they have, how much they have in revenue reserve? Revenue reserve they have 15 lakhs. How much they have in revenue reserve? They have 15 lakhs. So remember, for securities premium, don't get confused. Free reserves including, always whenever I say free reserve here in buyback of share, which is including what? Securities premium account. So here 2,50,000 plus 1,25,000 plus 15 lakh. So how much it is? Total 2,50,000 plus 1,25,000 plus 15 lakh. It's come 18,75,000. So 18,75,000. So total paid up capital and free reserve, it is 31,25,000. 31,25,000. Okay. Now what is the condition? That maximum, how much is allowed? 25% of paid up capital plus free reserve. So now write down there 25% of 31,25,000. So 25% of 31,25,000. So 31,25,000 multiply by 25%, that's come 7,81,250. 7,81,250. This is 25% of paid up capital plus free. This is 25% of paid up capital plus free. This maximum is allowed. But this is the maximum amount that we can utilize for the purpose of buyback. If we want to convert in terms of shares, this is 7,81,250 is amount. So this is the maximum amount that we can utilize for the purpose of buyback. But if we want to convert into shares, so write down here buyback, write down there buyback price per share. For one share, how much we are paying? We are paying for one share, we are paying rupees 20. So for one share, how much we are paying? For one share of buyback, we are paying 20 rupees. So the maximum permitted amount as per these tests, resource test, we can utilize 7,81,250, and for one share we are giving them how much? 20 rupees. So write down here number of shares that can be buyback. Number of shares that can be buyback. So maximum amount is 7,81,250, and for one share we are giving them, how much we are giving them? 20 rupees. So 7,81,250 divided by 20, that's come 39,062.5. But don't round it off. You tell me how much it is coming? It is coming 39,062.5. Don't round it off to 63. First of all, it is number of share. This is not amount. So don't round it off to number of share. It is what? First of all, it is not amount. So don't round it off. So here, some of you may say that actually, sir, it is coming. Actually, is coming 39,062.5. So which is correct? Can I say that 39,062, or can I round it off 39,063? Okay, which one is correct? So here this one, first one is correct. Don't round it off to 63. So some of you may say, but why, sir? But if you round it off to 63, what happen? It means that as per these condition, first as per these condition, resource test maximum number of share that we can buy back is 39,063. Now type in your calculator 39,063. Type in your calculator 39,063 multiply by how much you are paying for one share. You are paying for one share 20 rupees. So that will come 7,81,260. 39,000 share, 39,063 multiply by 20, that's come 7,81,260. What does it mean? That if you multiply by rupees 20 that you are paying for one share, that's come 7,81,260. But how much maximum number of, how much is the maximum amount that we can utilize? That is 7,81,250. So what happened if you round it off to 63? If you round it off to 63, that will come 7,81,260 amount will come. Okay, 260 amount will come. So this is a violation of first condition. The maximum amount that we can utilize is 7,81,250. So don't round it off this 39,062.5 to 63. Take it as 62 only. So how much maximum number of share that we can do buyback as per first condition resource test? It is 39,062. How much we want to do? How much we want to do? We want to do buyback of 25,000 share. So how much we want to do? We want to do only 25,000 shares, and maximum how much we can do as per first condition, that is 39,062 shares. So there is no problem because we want to do thus 25,000, which is lower than this 39,062 share. So there is no violation of first condition, which is resource test. Now I am coming to next test. That is write down there. I'm coming to next test. Write down there now. Okay. Write down there second test. First one we have written. Okay. Write down the second test, which is shares outstanding test. Shares outstanding test. Okay. So as per these tests, okay, 25. It is 25% of shares outstanding. So here number of shares that we can, how many, first of all calculate number of shares outstanding. Number of shares outstanding. So total amount of capital which is given in question is 12,50,000 and 12,50,000 and share is of rupees 10 each. So how many shares they have? So as per these condition, 25% of outstanding share. Maximum how much? 25% of outstanding shares. 25% of outstanding shares. So how many number of shares first we have to calculate? So they have total amount of capital is 12,50,000. How much share they, what is the face value of share is rupees 10. So how many outstanding share? It will come that is 1,25,000 shares is outstanding share. How many shares they have? 1,25,000 share is the outstanding share. How many shares they want to do buyback? They want to do buyback how much? 20. They want to do 25,000. But I am saying as per the Companies Act, how much maximum they can do as per these condition, which is 25% outstanding share. So how many shares they have? 12,50,000. 12,50,000 divided by 10. So they have 1,25,000 shares. How many shares they have? 1,25,000 shares they have. So write down there 25% of shares outstanding. 25% of shares outstanding. 1,25,000 shares is outstanding share. Multiply by 25% of. So as per law, 25% of outstanding share we can do maximum. How many number of shares outstanding? 1,25,000 multiply by 25%. So that comes 31,250 shares. Now here, maximum number of shares that we can buy back as per condition 1, how much? 39,062. How much? We can do 39,062. As per condition 2, how many maximum number of shares we can do buyback? 31,250. So write down here, number of shares that can be buyback is 31,250 shares. So as per second condition, the maximum number of shares that can be buyback is 31,250. Now there is a one more test, that is third test, which is debt equity ratio test. Third test is debt equity ratio test. So write down there, after buyback, debt cannot be in excess of twice of the paid up capital, and free reserve. Now understand this point. This condition says that after buyback, your debt cannot be more than the twice of the paid up capital and free reserve. For example, suppose after buyback, your paid up capital and free reserve. Suppose after buyback, your paid up capital and free reserve is 0.5. How much it is? Suppose 0.5. So how much your debt cannot be more than 1. Your debt cannot, or to make it simple, if I say after buyback, your paid up capital and free reserve suppose is 1. So how much maximum debt cannot be more than 2. What is the condition here? That after buyback, your debt cannot in excess of twice of the paid up capital and free reserve. How much is the paid up capital and free reserve you have? The paid up capital and free reserve is 1. How much is paid up capital and free reserve is 1. Your debt cannot be twice of the paid up capital and free reserve after buyback. You understand this point? So it says that after the buyback, your debt cannot be more than twice of the paid up capital and free reserve. How much is the paid up capital and free reserve? Suppose after buyback, if it is 1, so how much your maximum? Your debt cannot be more than 2. Now what do you mean by debt here? Remember one thing, debt here means short term and long term. If you see in balance sheet, here the debt are non-current liability and current liability. So debt here means, for the purpose of buyback, non-current and current. It means short term and long term both. So when we will calculate amount of debt, we will take this 28,75,000 and 16,50,000. If you want to see the detail of this 28,75,000, note number 3, which is 18,75,000 and 10 lakh. The total amount of long term debt. Anyways, so total is 28,75,000 and 16,50,000. So what does it mean? That your first of all debt include both short term and long term for the purpose of this buyback. What do you mean by debt here? Both short term and long term, both. Short term and long term, both. Okay. So current means short term. Okay. Both it covers. So whatever your paid up capital and free reserve after buyback, your debt can, for suppose it is 1. So your debt cannot be more than 2. So can I say in percentage form? If this is 100%, if suppose this is 100, so can I say it is 50%? Can I say it is 50%? Okay, 50%. Or you can say, if I say 50% off. Here if I say, suppose if the debt is 100, okay, to make it simple, suppose if the debt is 100, how much is the, suppose debt is 100, how much minimum paid up capital and free reserve? Here it should be 50. So your paid up your debt cannot be more than the twice of the paid up capital and free reserve. Now understand this point. What happened? How much is your current debt? How much is your current debt? Because after buyback, there will be no change in the amount of, at the time of buyback, there will be change in amount of paid up capital and free reserve. So first see how much is debt we have. So first write down here point number A, write down here debt. So how much is debt? Here you can see non-current liability, which is long term, 28,75,000. So 28,75,000 plus, you can write it down like this also, 28 bifurcation is given here. You can write it down 18,75,000 plus 10 lakh, same thing. And 16,50,000. So plus 16,50,000. So your total debt is 28,75,000 plus 16,50,000. So it is 45 lakh. It is 45,25,000. 45,25,000 is current debt. So if I say this 45,25,000 is 100, how much should be minimum paid up capital and free reserve after the 50% of this? 50% of this. Why 50% of it? First write down, then we'll connect it. Okay, write it down. Point number B. Minimum paid up capital. Minimum paid up capital and free reserve to be maintained after buyback. So how much paid up, how much debt we have? Debt we have is 45,25,000. How much debt we have? 45,25,000. If I say that debt is 100, so paid up capital and free reserve should be minimum how much? 50% of it. So write down here 50%. First write down, I will connect it, don't worry. 50% of it, which is 22,62,500. First write it down, now we'll discuss. Okay, 22,62,500. Now understand this point. What happened? Why they should maintain minimum paid up capital and free reserve? It should be how much? 22,62,500. Why minimum? If it is minimum, it should be. If it is, what happened? If you calculate less, if you take any figure lower than this 22,62,500, let's, for the purpose of just understanding, just take 22 lakh it is. If I take it 22 lakh, what is the twice of the 22 lakh? That's come 44 lakh. In that case, your debt will be more than 44 lakh. Yes. So it means that take any figure lower than this. Let's take 20 lakh. 20 lakh. So twice of 20 lakhs come 40 lakhs. So your debt will be more than 40 lakh. Then it will be a violation of this condition. So your debt cannot be more than or in excess of twice of paid up capital and free reserve. It means if your debt is, current debt is 45,25,000. If I take it 100, then 50% of this debt should be maintained in the form of paid up capital and free reserve. If it is lower than this, then it will be a violation here. If you take any lower than this, take 50, you take it here 40. What will the twice of 40? 80. Your 100 is more than 80. Okay. That's why it can, here for, so it cannot be more than the twice of the paid up capital. It means minimum how much should we maintain after buyback paid up capital and free reserve? It should be minimum how much? 22,62,500. It cannot be lower than this. If it is lower than this, and if you do the twice of that amount, then your debt will be more than the twice of the paid up capital and free reserve. The first step here, your debt is, current debt is 45,25,000, and how much minimum paid up capital and free reserve that should be maintained after buyback, which is 22,62,500. Okay. How much current, this is how much present paid up capital and free reserve you have. So write down here point number C. So here point number C, present paid up capital, present paid up capital and free reserve. Present paid up capital and free reserve. How much present paid up capital and free reserve? We have already calculated in point number 1 here. First resource test. You can see here paid up capital and free reserve. Whenever I say free reserve, which is including what? Securities premium account. So here paid up capital and free reserve is 31,25,000. So present paid up capital and free reserve is 31,25,000. Now you tell me, if present paid up capital and free reserve is 31,25,000. 31,25,000. Okay, let me write here. Here we will write it down point number D. But before that, understand this. Okay, for whenever I use any color other than blue, you know it. That is just for your reference or for your understanding. Okay, no need to draw this box in examination. Okay, now understand this point. What happened here? If I say that how much is present paid up capital and free reserve? Present paid up capital and free reserve is 31,25,000. All of you agree? This is present paid up capital and free reserve. Okay. How much should be maintained? It should be maintained 22,62,500. So less 22,62,500. It should be maintained. So present we have 31,25,000 and how much should be maintained after buyback, which is 22,62,500. So you may say, sir, so it means if we deduct from 31,25,000, if we deduct 22,62,500, then the remaining that can be utilized for the purpose of buyback. Yes, but there is one point there. This amount is present amount and it should be maintained how much? 22,62,500. So present is 31,25,000 and how much it should be maintained? 22,62,500. It should be maintained. But remember one thing, when you will do the buyback, very important point now, when you will do the buyback, you have to transfer some amount to CRR account, and CRR account is not a free reserve. CRR account is not a free reserve. So type in your calculator 31 lakh. Please type in your calculator 31,25,000. How much you have? 31,25,000 minus 22,62,500. So balance come 8,62,500. So we cannot say that 8,62,500 can be utilized for the purpose of buyback. No, we cannot utilize 8,62,500 for the purpose of buyback. Why? Because out of this 8,62,500, some amount will be transferred to CRR, and that CRR is not a free reserve. It means that the amount that should be maintained is present amount is 31,25,000. The amount that should be maintained is 22,62,500. The balance we have 8,62,500. Out of 8,62,500, we have to transfer some amount to CRR. So we don't know how much amount we have to transfer to CRR. Let's call it X. Let's call it X. So this much amount we have to transfer to which account? CRR account. And whatever balance left, let me call it Y. This much amount we can utilize for the purpose of buyback. Now I am repeating these ABC 3 points here. Now understand this. How much is the debt we have? Current debt, which is 45,25,000 we have. How much minimum should be maintained? The 50% of debt, because your debt cannot be more than twice of the paid up capital and free reserve. So 50% of this debt, 50% of paid up capital and 50% of debt should be maintained in the form of paid up capital and free reserve. Why 50% I am saying? Let's take an example. Suppose your debt is 100 and minimum it should be maintained paid up capital and free reserve after buyback. Minimum it should be maintained how much? 50. Just for the understanding, let's take any figure lower than this 50. Let's take 40. Do the twice of 40. 40 multiplied by 2. How much it will come? It will come 80. So your debt will be more than 80. Your debt will be more than what? Your debt will be more than what? 80. So your debt, if more than 80, your debt is how much? 100. And if you do the twice of your paid up capital and free reserve, suppose your paid up capital and free reserve is suppose 40, twice of 40, 80, your debt is more than 80. So that will be a violation of what? Debt equity ratio. So that's why I'm saying if debt is 100, so your paid up capital and free reserve should be minimum 50 of it. Then if you do the twice of this, debt cannot be, then in that case debt will not be more than the twice of paid up capital and free reserve. So how much minimum paid up capital and free reserve should be maintained? 50% of debt. The debt is, here debt is 45,25,000. If you take 50% of 45,25,000, that's come 22,62,500. This much paid up capital and free reserve should be maintained. How much paid up capital and free reserve we have? We have 31,25,000. So present we have 31,25,000. Out of this, the amount that should be maintained, which is 22,62,500. So don't tell me that the difference of these two come 8,62,500, that can be utilized for the purpose of buyback. No, because out of that 8,62,500, some amount will be transferred to CRR. Some amount will be transferred to CRR. Let's take CRR is X. So minus X, whatever amount then come, that can be utilized for the purpose of buyback. Okay, so don't worry. Now we'll solve what happened. There are one more or 2-3 steps are left. First we'll solve this, all the steps we will cover here, and in so many questions this calculation will come, debt equity ratio. So once you solve 2-3 times this debt equity ratio calculation, it will be so easy for you. So don't worry. Now write down here next step, which is maximum permitted buyback of equity. Maximum permitted buyback of equity. Write down here working note number 1. So what is working note number 1? Don't worry, just write it down. Maximum permitted buyback of equity, and keep the space for 3-4 lines, and then write down working note. Write down here working note. Write down here first amount transferred to CRR and maximum equity to be bought back will be calculated by simultaneous equation method. Suppose to CRR we will call it what? We will solve this equation. Okay. To CRR we will call what? X, and to the maximum amount, which is Y. So suppose amount transferred to CRR is X, and maximum permitted buyback is Y. Maximum permitted buyback is what? Y. So what X represent here? Which is the amount of CR. What Y? The maximum permitted buyback amount. Okay. Now write down here. Then I'm writing in next page. You have to write it below this. I'm writing in next page. Then first equation. How much amount you have? Present paid up capital and free reserve is 31,25,000. One by one. What is the present paid up capital and free reserve? 31,25,000. And out some will be transferred to CRR account. And how much should be maintained? 22,62,500. It should be maintained. So remaining can be utilized for the purpose of buyback. What is this 31,25,000? Present paid up capital and free reserve. It should be this is present. It should be maintained. And it will be utilized for CRR. So remaining can be utilized for what? Buyback. You understand this point? So we have this much 31,25,000. Some will be transferred to CRR, some will be maintained, and the remaining can be utilized for what? Buyback. Now write down second equation there. Second equation. Y divided by rupees 20 multiplied by rupees 10. Now understand it. What is this? Y divided by 20 multiplied by 10. What do you mean by Y? What do you mean by Y? Y is the amount of buyback. What do you mean by Y here? Y is the amount of buyback. You agree? Yes, Y is the amount of what? Buyback. If Y is the amount of buyback, if I divide it by rupees 20, what is this rupees 20? Rupees 20 is buyback price. Rupees 20 is what? Buyback price. And rupees 10 is face value. So can I say here, now understand this point, Y is the amount of buyback. If you divide it by 20, so number of shares will come. This is the amount of buyback. Y is the amount of buyback divided by buyback price. So number of shares will come. And if you multiply by 10, so how much? Multiply by 10, which is face value, equals to what we call it? We will call it what? X. What is this X here? X is the amount of CRR. And you know that in CRR account, what we transfer? In CRR account, we transfer face value of buyback. Face value of buyback of shares. So here, this amount of buyback divided by buyback price. So number of shares will come. Yes. Now multiply by with face value, that will come the amount of CRR, because we are multiplying by face value. So Y divided by buyback price, that's come number of shares. Multiply by face value, that will come amount of number of buyback multiply by amount of face value. So that will come amount of CRR. So CRR is what? X. I am repeating it. Y is the amount of buyback divided by rupees 20, which is buyback price, multiply by rupees 10, which is face value. So Y divided by 20, then number of buyback of shares will come, multiply by face value, then X, because when we transfer to CRR, we transfer face value. So this is number of share, this is number of shares, multiply by face value, amount of CRR will come. So can I write this equation as, or can I write this equation as can I write is this is this equation, okay? Can I write it as 2x equals to y? Can I write it as, just 1 minute, can I write it as 2x equals to y? Is face value. Okay, so 2x equals to y. Simple maths. Okay, now here if we solve here by solving, write down there, by solving the above equation, by solving the above equation, we get, by solving the above equation, by solving the above equation, we get, what we will get? X and y. Understand it. Now how much is y equals to 2x? Can I say y equals to 2x? Yes sir, y equals to 2x. Now put 2x here, put 2x here. So 31 lakh 25,000. Okay, how much? 31 lakh 25,000 minus 22 lakh 62,500. That's come 8 lakh 62,500. And here how much is y? Y is 2x. So x will transfer here, so it will come 3x. So 8 lakh 62,500 divided by 3. So x will come 2 lakh 87,500. 2 lakh 87,500. So how we have calculated this simple equation? Okay, let me write here. How we have calculated this here? That 31 lakh 25,000 minus x minus 22 lakh 62,500 equals to y equals to 2x. So here it will come 8 lakh 62,500 equals to 3x. X equals to 8 lakh 62,500 divided by 3. It will come 2 lakh 87,500. Now you can calculate easy now, and we have find out x now. So you can put the value of x here. and x, that is 2,87,500. 31,25,000 minus 2,87,500 minus 22,62,500. So y will come 5,75,000. So put the value of x, 287,500 here. So 31,25,000 minus 2,87,500 minus 22,62,500. So y will come, or you can say if x is 2,87,500, so 2 multiplied by this x, so y will come, which is 5,75,000. So we have find out the value of x. What is this x? X is the amount of CRR and y is the amount of buyback. Now write down there maximum permitted buyback of equity. So write down there point number D. How much it is? 5,75,000. Y 5,75,000. Okay. So write down point number E. Maximum number of shares that can be bought back at the rate of rupees 20 per share. So we can utilize maximum 5,75,000 divided by buyback price is 20. So it will come 28,750 shares. 28,750 shares. Okay, write down 28,750 shares. Now I am repeating this third test, which is debt equity ratio test. Okay. What happened here? What is the condition? Third condition, that your debt cannot be more than twice of the paid up capital and free reserve after buyback. Suppose if your debt is 100, so your paid up capital and free reserve will be 50. Or if I say suppose after buyback paid up capital and free reserve is how much? 1. Okay. So how maximum your debt should be? 2. If paid up capital and free reserve is 1, how much maximum your debt should be? 2. So can I say your paid up capital and free reserve is 50% of debt? Yes. 50% of 2. This is 1. Can I say this 1 is 50% of 2? Yes, correct. So your debt is 45,25,000. You know this debt 45,25,000. So your paid up capital and free reserve minimum it should be maintained how much? 50% of your debt. So 45,25,000 multiplied by 50%, that's come 22,62,500. Okay. How much the present paid up capital and free reserve, which is 31,25,000. So 31,25,000 is present. 22,62,500 it should be maintained, and some amount will be transferred to CRR, and that is we call it X. Minus X equals to what? Y, which is the amount that we can utilize for the purpose of buyback. Now, how to find out this X and Y? We will find it out by simultaneous equation. So we have solved by simultaneous equation that first 31,25,000 is the present paid up capital and free reserve. X is the amount of CRR, and 22,62,500 it should be maintained. Whatever amount left that we can utilize for the purpose of buyback. So here what is this Y? Amount of buyback divided by buyback price. So number of shares will come, multiply by face value. So CRR amount will come, because if you have this is number of shares, Y divided by 20, this is number of shares, multiply by face value, this is what? Y divided by 20, this is number of shares, multiply by 10, which is face value. So amount of CRR will come. Okay. So can I write this Y divided by 20 multiply by 10 equals to X? Can I say 2X equals to Y? Now put 2X here, put 2X here in the place of Y and solve the equation. You will get 2,87,500. Okay. Now if we find it out X, then we know X here. So this present minus CRR minus maintain, the amount of buyback will come, that's come 5,75,000. So maximum amount that we can utilize for the purpose of buyback, this is maximum amount which is permitted for the purpose of buyback as per condition 3 is 5,75,000. How much you are paying for one share? 20 rupees. So how many number of share you can do buyback as per this third condition? 28,750. Now as per first condition, how many number of shares we can do? With 39,062. As per second condition, 31,250. As per third condition, 28,750. If I take least of these three, then there will be no violation of any condition. If I take least of the three is how much? 28,750. If I take the maximum number of share that the company can do buyback is 28,750, then it will not be a violation of third condition, it will not be a violation of second condition, and it will not be a violation of first condition, because here it is saying 39,062, 31,250, and here it is how much? 28,750. If you take least of these three, then there will be no violation of any condition. So write down here summary of statement. Okay, summary of statement determining the maximum number of shares to be bought back. So as per resource test, how many shares? Number of shares as per resource test first is maximum 39,062. Write down here 39,062 shares. As per shares outstanding test, how much it is? 31,250 shares. How much it is? 31,250 shares. Third, debt equity ratio test, which is 28,750 shares. So as per first condition, we can do maximum this, as per resource outstanding this, shares outstanding, as per debt equity this. If you take least of these three, then there will be no violation of any condition. Okay, so write down here maximum number of shares that can be bought back, least of the above is 28,750 shares. So maximum number of shares that the company can do buyback is how much? 28,750. How much company want to do? The company want to do only 25,000 shares. So no problem. The maximum buyback that the company can do is how much? 28,750, and the company want to do only 25,000. So they can do it. Why we have done this three tests here, three calculation here? Because it is asked in the question, comment with your calculation. That's why we have done it. Okay. Now write down here. So company qualifies all tests for buyback of shares, and came to the conclusion that it can buy maximum 28,750 shares on 1st of April 2021. However, company wants to buy back only 25,000 equity shares at the rate of rupees 20. Therefore, buyback of 25,000 shares as described by the company as described by the company is within the provision of the Companies Act 2013. Within the provision of the Companies Act 2013. Okay, within the provision of Companies Act 2013. So they can do buyback of 25,000 shares. Okay. Now we have to pass that entry. Very simple. 25,000 shares buyback of rupees 10. They are doing buyback at rupees 20 only. We just have to purchase and cancel it, and premium on buyback will be adjusted against securities premium. As it is out of profit, we have to transfer to which account? We have to transfer to CRR account. Now we'll take a break. Now it is easy now. This calculation when you will solve 2-3 question on this test now, 3 condition, it will be so easy for you. What is the first condition? That maximum amount that we can utilize for the purpose of buyback, 25% of paid up capital and free reserve. So here 7,81,250. For one share you are paying 20. So these are, if you convert into number of shares, that's come 39,062. Second, share outstanding test. Whatever your shares outstanding, maximum we can do buyback 25% of it. So 1,25,000 shares is outstanding. 25% of it comes 31,250. Third, your debt cannot be more than twice of the paid up capital and free reserve after buyback. So if I say debt is suppose if I say paid up capital is 1, twice of it 2. So if paid up capital and free reserve if 1, the debt cannot be more than 2. So can I say your paid up capital is and free reserve is 50% of this debt? Yes. So minimum that should be maintained is 50% of your debt. So your debt is here 45,25,000, 50% of it 22,62,500. How much is the present paid up capital and free reserve? 31,25,000. So 31,25,000 is present paid up capital and free reserve. 22,62,500 should be maintained, and minus X. What is this X? The amount that we have to transfer to CRR. Whatever left that we can utilize for the purpose of buyback. Now to find out X and Y, we have to solve it by simultaneous equation. We have solved it by simultaneous equation and we find out how much. 5,75,000 is the amount of buyback. 5,75,000 divided by, for one share how much you are paying? Rupees 20. So maximum as per these tests 28,750. We will take least of these 3, so there will be no violation of any test, and the number of buyback of the number of shares that you want to do buyback, that should not be more than the permitted limit. How much is the permitted limit as per these tests? Is 28,750, and we want to do buyback only how much? 25,000 shares. So now we will take a break for 10 minutes. After that we will do general entries. Very simple. We will solve general entries and then we will prepare balance sheet. Take a break for 10 minutes.